GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of this weekly webinar. We've seen a powerful move in the US dollar at the tail end of last week. It took the euro below 119 and it's extending its losses this morning. Big moves in oil prices. Oil topped $70 per barrel over the weekend, and that's on futures prices. Spot prices a little bit lower on Middle Eastern tensions. And we've seen a big drop in stock markets last week, but then a big rally back on Friday, but futures seem to be edging a little bit lower in the start of the new week. So let's get into all of that now. If there are any extra markets you want us to cover, please drop a comment in the video. And if you're enjoying it and getting some benefit, please click that like button. Click that like button right now. That would really help us out. Okay, so let's have a look at the euro. So things kind of panning out as we suspected, really. Having taken out, having put in that. If you remember what we were talking about last week was that we had put in this kind of big spike reversal. We had previously been talking about an inverse head and shoulders pattern, and what I said last week was that actually, don't worry, because this was a decent inverse head and shoulders pattern. The fact that it's reversed is a strong pattern in itself and a strong bearish pattern, and it probably means we go test the lows if not further. And so that's precisely what's happened. Some big down days, 4 down days in a row as we speak in the euro, and it's taken us right back down to, this was the low we made in November. We had that big rally up to 123.50. We've now pulled back exactly 61.8% of that, and it does come into it does match up with these previous peaks through here. So this is actually a decent area of support, but at the moment there isn't much price action to signal that the price is going to stop here. It may eventually, if we get a big reversal off the lows today, because you can see we're pretty much neatly coming into that previous peak here. This down move, if we get a big reversal up and we maybe even finish the day higher, that would be a solid bit of price action. But at the moment it's looking fairly bearish. And there really isn't, apart from the, you can put in the 74.2 or whatever level you use, the 76. That's a potential barrier a little bit lower down. But otherwise, it would pretty much, as I think I said last week, if we take out this 61.8, we're pretty much looking at a challenge of 116. We did if you remember, a couple of weeks back we did a discussion. We did a week ahead video, and it said, would rising bond yields send the euro below 120? Well, obviously we're at 119 now, and that was, when that video was done, it was up at 122 or something like that. So that is what's transpiring at the moment. Bond yields are rising. That's causing some strength in the dollar, and the other currencies are weakening. So let's look at one of those other currencies. This is the British pound, holding up relatively better than the euro, but still suffering some weakness. This was pretty textbook. So we had a big leg down. Obviously some bearishness coming into the market after that big pin bar up there. Another leg down, and then at this stage we'd paused at 139. We popped up, basically just hit 140. And then we dropped down to 138. So anyone who got that trade, congratulations. But yeah, a nice one of just a leg down, a test of the 140 level, and a drop to the 138. So 200 neat pips to be had there in a fairly textbook trade. Now we're coming down to these previous support. I basically haven't changed this chart from last week. It's sort of panning out as we anticipated, with the next major support coming in at this low, and these previous highs through here, and this rising trend line. So the price looks like it's stabilizing a little bit, but no real signs of reversal except this bit of a long leg here, but I wouldn't put too much weight on that. It's still a big down day. So waiting really for the price to come down and probe into the, either the highs here, or maybe just to get closer to the trend line, it's going to be more like the closes through here. And that takes us down towards 137. I think that's kind of what we said we were aiming for in the downside last week. Oh, well, it'd be 137, but you get the point. 137, those peaks through there, if that gives way, we're coming down to 136, and this little spike low down here, that would take us below the rising trend line, but wouldn't necessarily be an end of the trend. It would just be, this particular speed of trend has given way. We've lost a bit of momentum, but it could be a sort of B, C, and we come down a bit lower, maybe back down to this hold high down here eventually around 135, and then leg up. So I'm not looking at this as necessarily a major trend reversal, although we did discuss this big weekly reversal last week and say that looks pretty ominous. But I think the major line in the sand remains 135, which is kind of this support through here. That was the big breakout level. So we kind of just need to hold that, roughly speaking, and we should still be alright. That's actually more like 133 that I've just drawn there, and 135 is through these highs here. So moving on to dollar yen, I mean, this just keeps working, this trade. You remember how long I was talking about waiting for the breakout, this declining channel? Well, it has it's happened with a vengeance. That often is the case. You see legs like this, and you're like, okay, ready for the break? No. See that? No. But then eventually, and yes, it's just absolutely skyrocketed. And but we're working pretty neatly as we've gone along. We probed that high. We talked about that high. Last week I said that it didn't look like it was going to stop there, and we've come up and we blasted even through this next high here. A little bit of a reversal at the end of last week. That was the pattern where we had a decent non-farm payrolls report, but there was a little bit of profit taking in the dollar, a little bit of a rebound, well, decent rebound on Wall Street. So that's normally how it's working at the moment. Dollar strength, stocks weakness, or stocks strength, dollar weakness is kind of the pattern at the moment. That kind of risk on, risk off thing. But you've got to say that although some sort of pullback you would imagine has got to take place, because it's becoming almost vertical, this price move, literally done 350 pips almost in a straight line, one down day. Whoops, I didn't mean to do that. I just wanted to zoom out. So next natural target is the 76.2. And there's not a lot to see why we shouldn't do that at the moment, except that the trend's getting very exhausted. I don't often need to, you can just see that the trend is exhausted here, but if we did want to insert indicators, oscillator, if we add in a bit of RSI, we can see that we're well overbought at this point. That does happen in a trend. So we could stay overbought for a while, but once we come out of overbought, from being this overbought, that would be the kind of confirmation that we're in for a bit of a steeper correction. Let's move on to crude oil, and I mentioned that that 70 level not quite being reflected in the spot prices, but as far as futures go, we did actually smash through that 70 level. That was in WTI, so obviously I'm looking at 70 levels in Brent. I'm looking at WTI here, hence the WTI pricing slightly weaker than Brent. Don't know if I can. Okay, there we go. There's the futures on Brent. You can see it's over that 70 level, which is a big area of resistance. So the round numbers often are particularly watched in oil markets, and sometimes it's when WTI hits a round number, sometimes it's when Brent. But in this instance, Brent has hit that 70 level. WTI just short at 68, but nonetheless, it's quite a big level. And we've actually hit this, we've broken above this major resistance from these two peaks that I really didn't think, I mean it did look like we were going to get here for a while, but I didn't think we'd get here this quickly. So yeah, you can see that I kind of had it through these closes for a while, and we blasted through there last week, and then you finally see that as of this weekend, we've kind of gapped open above that previous peak there, and so that's kind of explaining this opening gap for the week is getting us through that previous high there. Market makers in the crude oil pits in Chicago, pushing prices higher. As I said, Saudi Arabia and some kind of oil targets, something along those lines, flashed through the news. That was enough to get people worried that supplies might be choked off. All the while, the price was in a strong uptrend anyway. If we dig down onto the daily chart, there's not too much to be seen here. If there is some pullback, the first area you expect to look is between 65 being the round number, but also the previous peak is around 64. They would be the first area of support, and then there's these few little troughs down here. Maybe we come all the way back down to 60, but I mean that would obviously be quite a sizable price move, coming down from 68 to 60. But stranger things have happened in oil, and maybe we are. I've been saying for a while we are due some more like a consolidation phase, and so 60 or just probing below 60 to test these old lows. We go a bit sideways for a while. That would make a lot of sense. For the time being, we're in a blistering uptrend, so just trade according to an uptrend, but just be aware that we've struck that big resistance level in Brent. Right, moving on to gold, and it's been pretty ugly, but it has been playing out as we expected, because I haven't changed this from last week. We talked about the 50% Fibonacci level and also the 1760 support, which gave way. So the next probable target is the 61.8% Fibonacci on the downside, as well as these lows through here, and we've just bounced off the 61.8. Bit like in the euro, it's a major. It's a decent support level, but not really any price action evidence yet. You can see these two lows have perfectly nibbed off that 61.8. So no coincidence there. Great little short-term trades if you're minded to do something like that. That's not typically how I'll trade. Try and trade for a few more points than that. And to me, I don't quite have the confidence level to just buy into the level. Even though it is a confluence of support from these, from this old high here and the 61.8, kind of the beginning of this kind of these lows through here, it could easily charge through down to these lows, and that's still, that's still $20 odd or so. So depending on how big you want your stop loss and how much you're targeting to the top side, I'm not sure it's quite worth it yet. Where we're currently at the moment, well, basically it's 1700 obviously being the other part of the confluence. So it's the round number, it's the 61.8, and it's these cluster of old lows and highs. So three reasons to feel confident that this could be a major support level and maybe the end of this big correction in gold price before we begin the next leg up. But given how soft the price does look, to me, I'd probably want a bit more evidence that just a bigger daily reversal, some sort of pattern playing out, a failed, something where the price rebounds, tries to come lower, puts in something like a double bottom or something like that. After such a long downtrend, I would need more confidence than just what does look like a good level, but still the level probably not enough. Bearing in mind that if you do think that level is good, you just price your stop loss accordingly, you take profit accordingly, and you go for it. I like to see a little price action confirmation first. So gold, how do we summarize here? It's at a major level, potentially a little bit further to go if we're challenging these lows at 1670. I did want to point out that still on a kind of longer term basis, this was the big breakout as we charged into a new bull market down here, and that was well done at 1350. We're still at 1700 here, and this is obviously quite a major where we've started this rally from. We worst case scenario, we probably could get down to challenge these lows again, which is just a shade of, what's it, 1450 or so. Yeah, 1450. So we could be looking at something like that, but to me, I still don't really think so. This seems corrective to me, even though on the short term it looks pretty weak, the gold price. It depends what happens in bond yields. If we do see really strong bond yields, then I guess gold does have to keep going lower. But it still seems corrective to me, and I still feel pretty confident overall in gold above 1450. But just in the short term, I'm not buying it because it looks soft. Okay, so I think that's a pretty good summary of how we set up in gold. Let's move on to silver. It's just in this trade. It's in this sideways range. We've been looking for a breakout, because this is sort of I took it off because I don't really like it anymore. It's not really working. But just to say where we were thinking is that there's been a few challenges here. This was the madness with the short squeeze. We tried to break out a couple of times, and then last week again tried to break out, but just didn't really manage it, and we just drifted down through these previous lows, and we got this as a sort of support through here. But I'm not putting a lot of weight on it. If we get a decent price action reversal from this level, I'd be interested. But otherwise, I assume probably while gold stays soft, we just drift down towards the lows here. What is giving me confidence, not confidence, but what is potentially a positive to take away from silver is that it's not even taken out this kind of intra low within its range, whereas gold is coming down and hitting its lowest levels in 9 months, right? Silver was still comfortably up in the middle of this price range. If you call it a kind of 21 to 30 price range, it's at 25. It's basically in the middle of the range, so it's holding up relatively much better than gold. And there is a bunch of fundamental reasons for that. It's more of an industrial metal. Industrial metals have been doing pretty good on hopes for a rebounding global economy, whereas gold as a sort of store of value and protection against a falling dollar is not such in demand at the moment. Okay, moving on to the stock market, and so this is the daily chart zoomed in a little bit. You can kind of see what's going on. We have this quite neat trend line through the lows here. It's almost kind of that one, but that one and that one got kind of 4 touches on it, and it does seem like that last correction's found some pretty major support there. The first day we ended up well off the lows. We probed down there again, and we put in almost a kind of tweezer bottom near this trend line. We rallied up quite neatly. We're just looking a little bit soft again as we open the new week. So, what to conclude? I did read somewhere that despite all this kind of madness with rising bond yields and the sell-off in tech stocks, whereas the Nasdaq just entered correction territory, so it's down 10% from its highs. I think the S&P 500 is down. It was only down 2.5% from its record high. So just this little move down here looks kind of big on a daily chart. Doesn't even look that impressive on a daily chart. And then if you zoom out on a weekly basis, you can see it's just absolutely standard. These little pullbacks happening all the time, really, in the context of a bull market. And so from that prospect, potentially a buying opportunity. So I think for the moment we can basically use this rising trend line as the guideline for whether we're bullish or bearish the market. At the moment we've had a correction, we've had a rebound, confirm the correction might be ending. So looking fairly bullish at the moment. And I think we can just change our minds if we drop back to the trend line. Look out for this support, and then I think below this support things could start getting a bit tricky. below 36.50, say. And I think I said something pretty similar last week, and it hasn't happened yet. Okay, last but not least, let's have a look at Bitcoin. This is a daily chart, so you know, we were actually at record highs only a few days ago, a couple of weeks ago, I guess, at this stage. But we hit that record high, almost 58,000, and we've coming back and basically swinging around the 50,000 level. So again, a bit like silver, in that we did get very bullish over a few days, and we've basically been consolidating, but it's not looking like a really hefty sell-off at this point. Keep trying to get above 50,000, don't quite make it. Potentially it's some long-term distribution, the big holders gradually selling off around 50,000. Potentially that is what's happening at the moment, but no big degree of selling that's taking us through these lows here or through this trend line. If I put it on the 4-hour chart, we can see things a little bit neater. We're kind of, this I had in last week, we had a bit of a spike below it, but you can see I had this line, last week it looked more like this, and you know, extended it, and the extension works pretty good. So it does seem like the market's kind of reflecting this trend line. We've got these two lows through here, and you can see this pretty much, this 51,500 seems to be the resistance at the moment. We've got a few spikes, attempts above it, but not quite making it. So between 50,000 and 51,500 seems to be where the selling's taking place. So if we can get above there, especially on a closing basis, and it looks good for a rally up, and maybe hit that 60,000 level. So I don't think any reason to be particularly cautious on Bitcoin yet, but just keep an eye on these areas of support. They are buying opportunities potentially if we get down there, but also if those levels break, and then short term we're less bullish on Bitcoin and expecting deeper corrections. One last thing I'll leave you with. If you do think Bitcoin's getting to 100,000, think of things in terms of a risk reward. If you think it's getting to 100,000, maybe you would actually want a TP maybe 98, 99,000. So if the price does drop down to 33,000, say, which would be down here, just above these previous lows down here, say the price did go in for another big drop, and probably if it was down there, it would look a bit worrying to be buying into. You know, it could look like the next 80% collapse. But just bear in mind, if you did buy in at 33,000 and you thought it was going to 100,000, that would be a 3-to-1 risk to reward ratio, 33 to 99. Okay, I'll leave you with that. Thank you very much for watching this week. Good luck trading, and see you at the same time next week.